The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And what I did today for Tiger TV is I posted a chart from the Indian stock market that's traded in Mumbai, and it's one of the larger stocks there. I just wanted to show you that the patterns are the same, in any market. I've posted these in China, from China and Hong Kong, and also, India, and I think of several other, stocks, because they're all the same. They all do the same A, B, C, D, the same retracements and stuff. And that's primarily because, we're looking at, nothing more than fear and greed, and we're all humans. We all act the same, whether we want to believe it or not. That's the way it works. I wanted to cover a little tiny bit of business here before we do the U.S. dollar index and the euro. But Arch Crawford is going to be my guest at the half hour at 9:30. He's going to talk to us about this December 29th date that he's watching very, very closely. And also two things of interest that I think that we should keep in mind. One is both TBT and SDS are going to have a reverse splits of 4-to-1. Now, the reason why they have the reverse splits of 4-to-1 is that so the price will be high enough so that the hedge funds and mutual funds are able to buy them. Because if they are not under, if they are under a certain price, i.e., $15 a share or whatever that price is, then you will be able to, these people will be able to buy it. So they're going to do reverse split. This will be automatically probably fixed into the price so that the chart won't look very much different. They did this, remember, the reverse split with General Motors at 20-to-1 and the reverse split at AIG at 20-to-1, and that's the same thing. And if you look at AIG, it's still trading, down about 99% from its high, and General Motors is, down a huge amount from its high also. So these are things that, will probably affect the market. We'll have more and more, volatility, as we go through. Now, I wanted to start the show, with the U.S. dollar index because last week we hit that exact 61% retracement coming off the October lows. But the important thing about the dollar index chart is that if you'll take a look at it, you'll see these little yellow ellipses that I have put on the chart, and you'll notice that these ellipses are perfectly equal. And this is another way of looking at the harmony in the market. There's a lot of people that have looked at this in the past. Gartley being one, and also George Cole, and also Ralph Elliott also looked at moves that were comparable. And then of course W.D. Gann did the same thing. But that's just what you're looking at, is equal moves. And all these moves are interrelated. We already know that just by looking at all the patterns and how these ratios come together. But this happens to be one in the dollar index that was coming at the same time that the euro was hitting the 131.50 level. Now, the difference between what's happened here with the U.S. dollar index and what's happened with the euro is very significant, because the U.S. dollar index has actually moved maybe $1,000 in one direction. However, if you take a look at the U.S. dollar versus the euro, you'll see that the drop is actually been down over $3,000. It's actually $3,500 from the high to the low. The high that we made, last Friday, and so this is why we had a 786 retracement and a big 382 retracement in the euro. This was nothing more than a big rally in a bear market. And if you go back and look at the period between September and October of 2011, you'll see that it equals the rally that we had between July and September of 2012. So this was nothing more than a rally in a bear market as we see it right now. But these are, some of the things that we want to watch because, the trend is still basically down sharply in the euro. And, they used all the rhetoric that they could to get the prices up to that level. They were going to have unlimited and unconditional, buying of the bonds. And, that has so far, not worked, the way that they wanted. Now, the next one that we need to focus on here, I believe, is the gold market, because we talked about the gold making that real critical level of 1790, which was the 61% retracement, on the long-term high from the high that we made at 1932 down to the low at 1522, and the rally back took us exactly to 61% retracement at 1790. The high on the gold at that time, October gold, came in at 1791 and change. So this is why we're important. Now, this is a really important day in the gold market, and the reason for that is I'm going to post it into Tiger TV so that you can take a look at it. We have made a beautiful AB equals CD pattern in the gold markets. It's taken 5 days to complete. We rallied yesterday up to the 61% retracement at 1777. That was the exact 618 to the tick. It hit it twice intraday, and then we've broken down now, and now we've made a 50% retracement off of the low that we made back on October the 6th. So what we have now is this is a very low risk buying opportunity in the gold when it got down to that 17.42-43 level. It's already rallied about $8, but that ABCD pattern coming in exactly at that 50% is what happened to the euro on the way up, and what happened to crude oil on the way up, and all the others that we were looking at. Even Apple did the same thing. So these ABCD patterns, Gartley said to buy ABCD patterns in bull markets, and we certainly have a bull market in gold, and this is the first one we've seen in almost 3.5 weeks. Looking at the intraday charts. So this is why it's such a very, very important time to be looking at the gold. The longer-term picture in gold, as long as if we can get above that 1790 level in the gold, and believe me, that it's not hard to do that. But if we do get above that, I believe we're going to be looking at new highs in gold without very much trouble at all. And that's what we're really trying to to focus on, when we're doing this. Now, the next one that I wanted to talk about is the wicked stepsister of the gold market, which is the silver market, because it is far, far less volatile. There's only 20% of the volume in silver that there is in gold. But if you take a look at the silver market on the daily chart, you'll see that the silver market hit the 786 retracement 4 times in the last 8 or 9 trading days before it started down. And now we're starting the same type of correction. And all the corrections in silver have been, relatively mild, only about, $2 or so an ounce. So if silver can hold that $32 per ounce level and gold can hold above 1710, and I'm assuming that this next high that we have will be a little bit lower, and we'll make one other push down in gold if that's going to be the case. But if that is going to be the way that the market unfolds, we could have another big move up in silver, but it needs to get above that $36 an ounce level in silver in order for it to be, really, really in good shape as I interpret it. But the fact that it hit that 786 retracement, from the March highs, we actually went up and took out the March highs in gold. Silver went up to the exact 786 retracement, and that was the exact same retracement that we had in copper. At 78% came in at $3.83 a pound, and copper is down, quite a bit, from that high that we had. It's down well over 15 cents, from the high that we made in the copper. So these are the way the metals are setting up right now. We have to watch them very closely, because these retracements most probably will have a pretty good opportunity, to be buying, just like we looked at in gold. They'd have a good, very low risk place to buy it. It's better to buy it, on weakness, because you don't have to risk nearly as much. And that's the whole purpose of what we're trying to do. Now we have another market that is it's really hanging by a thread today, as far as on a technical basis, and that is the crude oil market. I know we're not spending a lot of time on the stock market, folks, but you've heard my bearish stance for so long that I don't want to dance around it too much. But we have basically done everything that we've asked this market to do. We've had such a divergence between the Dow Jones Transportations and the Dow Jones Industrial Average. It's never been seen before that I know of. And Arch will be on at 9:30, and he's a very good friend of Richard Russell, who's the father of the Dow theorist, and he was speaking to Richard. And if you have a question, someone doesn't have the question, I'll bring the question up. But we'll be able to have Arch on, and maybe if you folks call in, you can ask him some questions. He is the dean of the financial astrologers, in my opinion, and he's certainly probably one of the more famous ones. But that's my opinion, folks, and you have to take that for what it's worth. But we'll wait and see. Okay, the next chart that we want to look at here is the crude oil chart, because we are really at a very, very critical level. We are setting right at the 786 retracement of the July 28th low. And if we go below 89 on a closing basis today, folks, this market, it is really big trouble. And I don't know, maybe gold has turned over, maybe silver has turned over, maybe crude oil has already turned over. We'll have to wait and see. But remember, this crude oil came down in the midst of the possibility Iranian nuclear war and closing of the Gulf and all this other baloney that we've heard about, and yet the market is starting down, and that's another sign that when the good news does not make the market go up, where is it going to go? And that's one of the reasons why we look at all the different markets to see where we are. But right now at the 89.60 level in the October crude oil, we're setting right at the 786. We're actually trading a little bit below it today. Our low today was 8,900, and if we take that out and close below that, the next level is at least $3 or lower on the longer term, picture for the crude oil. But the market went up and made an ABCD pattern to the upside up at that $99.50 to $100 barrel oil, and now we're backing off quite a bit. So we'll have to wait and see. Now the real importance of the oil here is because Helicopter Ben and also Super Mario have given unconditional printing of money. Now, if that's going to be superinflation, the one place it's going to show up, which we all use, is in the oil market. Now, people in undeveloped countries don't use the oil as much because they have to, live on, just basically, not historical, but primitive, conditions. They don't have cars, they don't have electricity and stuff like that. So anyway, we're going to take a break here. If you have any questions, 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. And, when I started the show, I talked about the divergence between the Dow Jones and the Dow Jones Transportations, and it really does mean something, in my opinion. Now, the patterns that we looked at, all those ABCD patterns, have started to move in our direction, if in fact that was the high last week, so we'll have to wait and see. Arch Crawford, who's going to be on at the half hour, has a date coming up on the 29th of this month. That is important. And by today is a very slow day in the market because this is Yom Kippur, the high holy days of the Jewish religion. I was at Drexel for 6 years, and I was one of 3 brokers that were non-Jewish. The other 20 brokers in the office were all Jewish, and there was nobody in the office that day, and the Wall Street will be a lot slower today just because of Yom Kippur. And by the way, I don't know if you folks know this or not, but Yom Kippur and Rosh Hashanah are lunar cycles. It's based on the lunar cycles. It's really an amazing. That's why there was Ira Epstein once told me that you should buy on Rosh Hashanah and sell in Yom Kippur. This time I don't believe it would have worked, but it might have worked for a little bit. I have to double check the figures, but it has a high probability of working. It's just a lunar cycle. Is all that it happens to be. Now, I did put in the Tiger TV, the VIX index, showing you that the major patterns that completed down there when the whole world was, buying the Dow Jones and the S&P and stuff, and the VIX was down, into that $14 range. We went down there and tested it. We did not take out those lows of August, which was really amazing. And so it's held. It started to move up a little bit, but I think we're going to see a lot of increased volatility in this index, before it's over. Now, also in the Tiger TV, I posted the chart for the longer-term chart of the British pound versus the U.S. dollar, and as you can see, there's been a very easy to see a pronounced AB equals CD pattern over the last several months and weeks, and you'll see that it actually has completed the perfect ABC up there at that 163 level. We were able to take the old high out by just a little bit. I mean, just a few pips, and then reverse very, very quickly. And that's a really important one when they do that, because if they're any good, they go blasting through and go on up and make a far higher highs and make it a lot easier to look at. But the main thing of this first half hour is I think what we need to focus on most of all, the fact that this divergence in the Dow and the transportations is very important. But the gold market and the silver market and the crude oil market, major inflationary type things, and the copper market, all of those hit major numbers and major pattern completions and everything. So we need gold to get above 1790 for it to be bullish again. I mean, we're going to have some nice swings like we had this morning. This was an ABCD correction, and if gold is really good, it's going to take out that 1790 like it didn't even exist. And if it does it in a matter of a few days or a few hours, gold is going to run, and it's going to run far. So just watch these, because if you want to try to buy these, you want to get to the point where you don't have to risk a whole lot. And buying breakouts is not my forte, because every time I've done that, I've had to send my checks directly into the Chicago Mercantile Exchange. But if you go down to the hourly charts that you can now, or the 30-minute charts, you can find these ABCD patterns that repeat, and they do it regularly. I mean, in every market and every exchange in the world, they're always doing the same thing, because it's basically nothing more than fear and greed working together. So this is what we're looking at. Because I'm really watching the gold, because I've been very bullish gold and silver for a long, long time. We had those higher bottoms that we talked about. We had the triple bottom in the silver, and then we had the 4 higher bottoms in the gold, and the XAU and Newmont Mining, all of those that we were looking at, and were able to pick up at relatively cheap prices when nobody wanted them, have really took off to the upside. I want to mention one other thing that Tom and Steve mentioned on their show, is that the Shanghai index, the Chinese stock market, is going down lower and lower. We've broken below the lows. We had a huge rally of about 3 days a couple of weeks ago, coming off of a 786 retracement. In a matter of a few days, the market totally collapsed below those lows and has continued down, which means you've got a major failure here. This is like when RIM was trading at around 56. It had the same type of, I think it was 56. I'm not sure the exact pattern, but when the exact price. But when it broke, I mean, it literally said there's no more support at this level. Okay, we're going to have a break here for a few minutes, and then we're going to have Arch Crawford, Samuel Arrington Hicks Crawford from Crawford Perspectives is going to be our guest. 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're back. We're going to have Arch on in just a second. He's holding, but I'm going to have another guest here right after the first of the year. I told you folks yesterday about my friend who had worked for one of the big Wall Street firms for many years. It was Smith Barney, and they merged with another company. And after 40 years, and he had done a great job, believe me, they had cut back their futures department, and so they let him go after 40 years. And he's going to come on and explain how it happened and why, and how they handled it and everything. And the basically reason why I talked to him quite a bit about this is we just want to show you that basically, folks, it's just you out there, buddy. You've got to be able to do this yourself. You can't rely on anybody else. If you've got a job, where you have someone that signs, the front of the check, that's great. But if you're the one that signs the fronts of the checks, you have to learn to do this the right way, and learn to be self-sufficient so you can have the freedom, to get this trading thing, done correctly. That's the main thing, and he'll explain to you that. That you really do have to do it yourself. Okay, we're going to have Arch Crawford from Crawford Perspectives on now. Arch, are you there?
Yes, I am.
How are you?
Pretty good, thanks.
Oh, you're coming in from such a long distance away. I think it's about 2 miles.
Something like that.
Yeah. Okay, Sam, you've talked in your letter about the August 29th date. Could you give the folks an idea of what you're looking at here?
September 29th?
September 29th. I think that was the thing that you had mentioned.
Yes. I think you just said August, but...
Oh, well, that's being Italian, Sam. I'm mentally challenged, so it is September 29th.
Okay. Yeah, in September 9th letter, September 4th newsletter, I said the second of 7 Uranus-Pluto square aspects comes in on September 18th and 19th. The importance of this one results with the fact that Pluto is making its direct station. It made its direct station within 25 hours prior to Uranus squaring it. In addition, Mercury opposed Uranus and squared Pluto just after the market close of the 20th. On September 25 and 26, Mars and Venus attacked the standing square of the Uranus-Pluto. The full moon on Saturday, September 29th, activates the full force and power of this very difficult alignment, igniting revolutionary action around the entire globe, at least as unsettling as the Arab Spring and far more concentrated in time. How much will cause geopolitical realignments and how much will be natural disaster related, we cannot guess at this time. We urge you to complete hurricane-like preparations, even in usually stable areas.
Wow. You think this is related to what's going on in Spain? I saw the news. I mean, that looked like a tremendous upheaval that's going on over there with all the fighting and rioting that's going on. Right.
Well, we had 21 Arab countries do it again in 2 or 3 days, right, when the ambassador was killed.
Yeah. And how about Greece? Aren't they have some type of a strike going on now too, don't they?
Yes, but Greece is very small in terms of international finance. But if Spain is having this much trouble, that could cause a lot more trouble on the international scene.
I understand. Now, you mentioned to prepare for hurricane type things. I know you're a big proponent of dried food and water and stuff like that and claymore mines. But do you think this is going to be something that is going to be changing us for quite some time? I mean, is this aspect
I think we will
that you're
not be the same after this period. A lot of people are projecting who's going to win the election, and I see that there's enough danger ahead that we might be under martial law and not have an election.
Oh, you're kidding.
Yeah, I'm kidding. This is really funny.
No.
But if you remember what happened in 2000, the election day took place on the direct station of Mercury, and it was 2 weeks before we knew who won.
Yes,
well, this one is taking place on the retrograde station of Mercury, and it's going to be even longer before we know who won, or it's going to be delayed, or it's going to be canceled.
Wow. Sam, the folks that are listening out there, they don't know you like I know you. I've known you 35 years, and believe me, folks, he's made some really startling predictions, and some of them haven't come true, but some of them really have. And when Arch tells you, to put a little extra water and canned stew away and stuff, I really think you probably ought to do it because, frankly, it's a little scary when you see all these things happening, and they're starting to come true in the news too. And this might just be the beginning of it all. I don't know.
Yeah, I think it's just the beginning, and the Mormons keep 2 years' worth of food in their homes. I think that's a good policy at this time. Well, even FEMA and our government is saying, well, we might have a sunspot that knocks out our electric grid, and you should be able to have enough on hand to last until it can get back up and running, which may be months and months.
Wow.
And that's what our government says.
Oh, dear, Sam.
Well, the high of the sunspot cycle is next May.
Yeah. Well,
there's one other paragraph here. The thing is, all of this is maximizing right into the U.S. fiscal year end on September 30th. That's the end of our fiscal year, and there may be dramatic fights over who does what with the budget, possibly.
I understand. Now, do you think that the astrology things are giving indications of who might be the president?
Well, among responsible or noted astrologers, the liberals think the liberal will win, and the conservative thinks the conservative will win.
Oh, so it's just like CNN.
CNN and Fox.
Yeah. Say, Sam, I wanted to ask. Go ahead.
They were having this debate at the biggest astrological conference this year in New Orleans, and I stood up and said, "Is anybody see the possibility that we might have a delay or a cancellation of the?" So they thought I was nuts too. So there we go.
Arch, nuts you are not. Eccentric you certainly might be.
I resemble that remark.
Yeah, I know you. Actually, folks, Arch can quote Shakespeare like you can never believe. I mean, it's always entertaining to be around him and stuff. Listen, Arch, if you were right, we're going to have you on again if we're still in business, and if we're wrong, we're still going to have you on. Okay?
Okay. Well, I'm short for these events coming up through the weekend.
All right. Well, I'm short too, but for a lot of different reasons. Hey, thanks for joining us, buddy, and we'll have you on, sometime before the election if you can.
Okay. Well, in terms of the technical, we've got extreme low VIX and we've got extreme low funds cash. I mean, there's real reasons without looking at the sky to be a little concerned.
Oh, Sam, one other thing I wanted to mention to you that we talked about last week. At the time I talked to you, you had spoken to Richard Russell about the divergence between the Dow Jones Transportations and the Dow Jones Industrials. Would you care to share what that conversation went like?
Well, he's written it up on his website, and he's just very concerned that that's a negative signal, But it will take the Dow Jones breaking below April's lows or June lows now before it'll give another signal. I think it gave a signal when we broke the April lows on the industrials, and the rails, the transports had non-confirmed on the upside. So that's what he was concerned about back in May, and then it hit a lower low in June, confirming the downside, and then the industrials came all the way back up. The transports came up a bit and have been dropping since about May. I think they hit the highs. So they're definitely non-confirming, and they've been dropping rather disastrously recently.
Yes, so they certainly have. They look very, very bad. Well, listen, my friend, I'll let you go back to work, and hopefully we'll talk in a few weeks, if that's okay.
Okay, fine.
Delighted, okay, thanks a lot, Sam.
Okay.
Bye-bye. Okay, folks, if you have any questions, it's 877-927-6648. If you have any questions, and I'll be happy to answer them for you. Now, I know that many of you think that Arch might be playing with two French fries short of a Happy Meal, but he's a pretty smart guy, and you were starting to see some signs, in the world economies like, Spain and Greece. I mean, the ones in Spain were very, very ominous of social unrest because they're cutting back on, social programs. And my gosh, what would happen in our country, if something like that would happen. I'm sure we'd start to see that type of thing. And that's also because, we have so much unemployment, and the way they do the unemployment numbers, they massage them to fit themselves, just like they do the inflation numbers. So, there's still a lot of problems out there, so we'll see. Now, remember, the stock market can go up through all of this. It did this in 2007, when many people were saying you got to be really careful up in here. But even now we have something, going on. Whether this, really draconian, that's a big word for an Italian to use, draconian effect is going to happen this weekend, I don't know. But, we are over full moon, and that does bring a lot of crazies out. So it's probably going to be quite scary. And I think probably being short over that weekend, might be the thing to do. Now, the question is whether the people are going to, put their money in safety like the U.S. dollar, or go against the euro, or put it into the Japanese yen. We really don't know, but we'll have to, keep in mind. The one thing that I do know is that you must watch this gold market, because if we clear 1790, especially after the low we made today, and that low holds at 1742, If that low breaks below 1742, then that ABCD pattern is really failed, and you could have a much greater correction all the way down into the 10 level, even all the way down to 1690, and it would still be bullish. Now we want to go to the Treasury notes and Treasury bond chart. I put up the Treasury note chart first because it's the shorter term paper, the 10-year paper, 5 to 10 year, and it shows the big AB equals CD pattern, that completed the butterfly, up into late July, early August, and then we had the retracement down, and then we had the rally up to the 61% retracement, and today we're making another 61% retracement. But this chart is important because if we take out those highs up at point D, in other words, if the notes start to decrease in value or increase in value where rate starts to drop again, it's going to be another flight to quality, and we could have another run, to test those old highs. Whether we do that or not, no one knows for sure, but I'm just telling you that the chart has been performing, as it should in a technical market. But this chart looks very similar to what happened with the Apple chart. Apple had this huge ABCD butterfly, and then it had 3 drives to a top, and it's a very, very, amazing chart in Apple. And the reason why you have to, keep it in mind is because the amount of people that are in the Apple stock is amazing because of the fact that it's on the news. It's almost hysterical. It's like that the book by Donald McKay, The Popular Illusion and the Madness of Crowds, and it shows that that people get very, very hysterical. He has so many examples of this. Going back to the tulip bulb mania, the Louisiana Purchase, the Florida lamb boom, all the gold rush in California. And also Rogoff and Reinhardt in their book, This Time is Different, does the same thing. It's never different. It's always the same. You might think that it's different this time, but it really isn't. I think there's something in the Bible that says, what has happened before will come forward. I don't know the exact the exact terminology of the Bible because it's a little too confusing for me to read, and I'm afraid I'm not going to be tested on it if I do make it to the promised land. But we'll have to wait till that day comes, which I hope will still be a few years out into the future. But be really careful if you're in the Apple, the Apple stock. We've broken down below the 786 of the last low of September 10th. That's exactly what happened in crude oil when it went below the $95 level, and that's what we're looking at. These are all technical stuff, folks. Fundamentals, I don't know diddly squat. I never said I did, never said I will, but I do know the technicals. And when they go below these points, it's telling you that, you've got to be careful. You have to pay attention to what's going on, and you'll save a lot of money. So be really careful because like I mentioned in Monday's show, Bernard Baruch, one of the greatest speculators of our day, of the days of the 20s and 30s, he wrote a book called My Own Story, his autobiography, and he said in there, the greatest scam on Wall Street is inflate it to a high price, and people will buy it all the way down thinking they're getting value. And we all know that the iPhone is the greatest thing since the recorded voice of Marconi. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. I posted into the Tiger TV the chart of December corn because we've been in a major drought in the Midwest, as we all know. You know, we saw the beautiful Gartley that formed, back in June. We recommended everybody that could buy the corn. And, of course, we had a huge move out of that thing and didn't take all of it. We took a nice piece of it. But the important part of this chart is the fact that corn stopped at the 1.618 on the long-term chart that goes back. This chart goes back just about 2 years. And we have the same pattern that happened in corn that is happening in apple right now. We have that 3-drive pattern that happened in apple at 703 per share. And if you'll take a look at that pattern that I posted into the room and compare it to the pattern that we have in corn, you have the same type of pattern. We've got tremendous bullish news. The crop is, it's already stopped growing, so it's all supply and demand now. So this is why you have to be, really, really careful when you do these, predictions. And I know everybody thinks that Apple's going to $1,000 a share, and it certainly might. But it's got to clear 703 before it does that. Right now, it's it's under the gun to get through here. Now, I wanted to mention a little bit about Arch, okay? When you make astrological predictions like this, it's very difficult. He really believes in all the things that he does. He's a classical astrologer. I am not a classical astrologer. I'm a cycles person. All I do is I look at the days of these cycles. I don't make the interpretation of Taurus or Libras or, whether you are in the 7th house or the 10th house and things like this. And a very good astrologer like Arch Crawford and Bill Meridian and Alfie Lavoie and Tim Bose, people like that have tremendous, success in making some predictions like this, but no one knows what's going to happen with 100% accuracy. Okay, folks? Just remember that. In 2000, when we were having the Y2K, when the whole world was going to stop and the computers weren't going to work in the supermarkets and all this stuff, everybody was scared to death, including myself and including Arch, and we had taken precautions to do this, and now we're doing the same thing with the the Mayan the calendar thing. I'm not doing anything about the Mayan calendar thing because if it's the end of the world, I just at least I'll be able to say I was here when it happened. That's the main thing. We're going to be okay no matter who gets elected or what. We live in a great country. We have wonderful people here. A real mix of things, that makes the economy, really strong. What we really need to do is to get our educational system back to where it should be, and I think, that would be part of it. And I'm going to give you one more political thing, and that's the flat tax. I want to end the show by talking about the astrology predictions. I've made several through the years that have been absolutely amazing. The October earthquake during the World Series of 1989, I believe, and then the Berlin Wall and a few others. But believe me, they're just having fun doing this. So don't bank any money on it. Everybody have a wonderful day, and may God bless, because she will always take care of us.